the U.S. Mint is supposed to issue as many silver eagles as is demanded by public.
Yeah.
It's in the charter. It's law. And they didn't. 100% they didn't. So are they stockpiling silver? Were they putting it away and viewing it as strategic? And when you look at the gold that went missing from Saddam Hussein and from Gaddafi, where did all of that gold and silver go? And what about the 12 billion that the Ukraine sold to fund the war? My point is that we don't update any of these numbers, gold and silver, but I will tell you, in my mind, Kerry, the military-industrial complex is probably the ones pulling the string.
Shechtman kicks off by discussing how the U.S. Mint, by law, is supposed to issue as many silver eagles as demanded by the public. However, for the past several years, it hasn't fulfilled this mandate. Shechtman believes that higher powers, potentially the military-industrial complex, are behind this manipulation, stockpiling silver for strategic purposes, particularly as silver is critical for advanced technologies, aerospace, and weapon systems. With silver reserves dwindling and its supply-demand dynamic tightening, this underreporting raises serious concerns about the future of silver availability and prices. Industrial demand. At the heart of Shechtman's warning is the surging industrial demand for silver. Today, 64% of global silver consumption is driven by industrial uses, up from 50% just last year. The push toward green energy, electric vehicles, and advancements in battery technology, all critical to modern economies, is intensifying silver's importance. For example, every electric vehicle battery now requires over a kilogram of silver, driving demand even higher. This trend is putting further strain on an already limited silver supply.
In 2020 and 2021, he said, the Mint came to me and they said, we want you to only release as few silver eagles as you possibly can to hold back public outcry. And in all of 2020, 2021, 2022, 2023, most of it, the U.S. Mint was the model of inefficiency, where I could import coins from Australia, South Africa, United Kingdom, at fractions of the price of silver eagles, which we were buying back from the public at $11 over spot, $12 over spot, selling for 13 over spot or 14 over spot, massive premiums, massive spreads, not enough silver to go around. And he said he was told to do that from his superiors. Well, who would his superior be? That'd be Janet Yellen.
The Secretary of the Treasury.
Right. And so Janet said, just as few as possible. This went on for 3 years. He said, before I was working for the Mint, I was on the supply side. I was an authorized purchaser for one of the big companies, and I know how this side works. And they came to us at the end of last year, at the time, it would have been 2021. And he said, we'll take another 36 million, or they said, we'll take another 36 million coins, and we gave them like another 12 million. Mm-hmm. The point of it is that the U.S. Mint is supposed to issue as many silver eagles as is demanded by public.
Yeah.
It's in the charter. It's law. And they didn't. 100% they didn't. So are they stockpiling silver? Were they putting it away and viewing it as strategic? And when you look at the gold that went missing from Saddam Hussein and from Gaddafi, where did all of that gold and silver go? And what about the 12 billion that the Ukraine sold to fund the war? My point is that we don't update any of these numbers, gold and silver, but I will tell you, in my mind, Kerry, the military-industrial complex is probably the ones pulling the string, not Biden. And
for sure, they run everything.
Right. And so if you need silver to make these weapons and to make high-tech aerospace and weaponry, and then even things like nuclear submarines, you need lots of silver. You have to keep the price down, or very quickly you end up in trouble. And maybe it is a conspiracy, maybe I am off base, but when you see them take it out of the supply-demand numbers, and when you see 7 Western banks shorting a commodity that is globally demanded and running out of availability in terms of its geologic footprint, it's at a 7-to-1 ratio right now, meaning 7 ounces of silver for every 1 ounce of gold mined. It was 16-to-1 for 5,000 years. So it's decreasing in nature. Mm-hmm. At the same time, it's accelerating in its uses. Take military out of it. You have green and digital applications that need copious amounts of it. This Green New Deal, without silver, you're in trouble. And of course, the new Samsung battery as someone who, I think you might drive a Tesla, and now they're talking about
State, yeah.
they're talking about these new batteries that will charge in 9 minutes and will, go like 600 miles or whatever it is, and that's a game changer. But they will take over a kilo of silver per car, and so, is it conspiracy? I don't know, but I do know that there was a whole consortium of companies in Canada that have petitioned the Canadian government to reclassify silver as a strategic metal. In my mind, they're onto something, and we ought to do the same thing too. Maybe we just haven't been honest about it, and instead are doing shenanigans like this in order to fund the ever increasing war drum that we see all around the world.
Dynamics. The silver to gold mining ratio has dropped dramatically. Historically, this ratio stood at 16 to 1, meaning for every 16 ounces of silver mined, 1 ounce of gold was extracted. Today, that ratio has shrunk to just 7 to 1, reflecting silver's decreasing geological availability. Sheckman notes that this supply constraint, combined with growing industrial use, sets the stage for significant price volatility, creating a perfect storm for silver investors. Geopolitical factors. Sheckman also touches on global geopolitics, questioning what happened to the gold and silver reserves of figures like Saddam Hussein and Muammar Gaddafi, and even Ukraine's $12 billion gold sale to fund its war efforts. His point? There's a lack of transparency in reporting gold and silver numbers. Sheckman speculates that these resources may be strategically hoarded by powerful entities, further reducing availability in the global market. Price suppression and market manipulation. Sheckman.
Welcome to Economy Express, your go-to destination for all things economics and finance. Whether you're an experienced investor, an inquisitive student, or just someone who wants to stay ahead in today's ever-changing economic landscape, you've come to the right place. Now, let's get into the details of our news.
Crazy, actually, to be honest with you. The lack of any media participation, the lack of any fanfare whatsoever is shockingly quiet. I mean, coming from someone who's done this for 35 years almost, when gold was $252, if you told me it would be 10 times that price and it would have virtually no attention and virtually no investment by the United States mainstream. Rick Rule often talks about 0.5% allocation from Joe and Jane six-pack all the way up to the Harvard Endowment Fund. And something that you follow perhaps a little bit more closely than I do, the mining shares. Now, I have a mining share portfolio because I've worked very closely with Sprott USA for a very long time. And out of respect, since they have been kind enough to trust me with their clients, I have a managed account there. And I don't even know exactly all the shares that I own. I trust my broker there, who's a friend, well enough to represent my best interests. And that might not be the smartest way to do things, but the bottom line is that I know I have a nice allocation to mining shares. And what's even more startling to me is that if you told me gold would be $2,500 and the mining shares would be beaten down the way that they have, I would say there's just no possible way that could happen. I think that's what it is. In fact, I think even the bulls don't believe it, that we've witnessed so many pullbacks that are counterintuitive. It's happened so many times, and how many times do I need to hear it? And I think the market just doesn't believe it. And that's what, to me, potentially makes this so very strong. Rick Rule, about in this environment, he would expect to see the majors go first, the ones that you mentioned, the Barricks and the Newmonts, and then the mid-tier majors, and then the juniors, and then the explorations, and of course also maybe my favorite, the royalty stocks.
The royalties for sure.
But it's interesting when you put it in that light. And I think the same thing is true about silver. People just don't believe that it will go. And I think that's fair. That's a fair point. We've watched it get hammered for so many years and so many times when the fundamentals would say that it shouldn't. And yet gold, here we are showing or leading the way. Now, that's also typically the way things go. Gold typically leads the way in these moves, and silver follows suit, oftentimes outpacing percentage.
Highlights that silver prices have been suppressed for years, with U.S. authorities potentially holding back public outcry by limiting the availability of silver eagles. He notes that even though silver has historically followed and sometimes outpaced gold in rallies, investors today remain skeptical due to years of counterintuitive market behavior, where silver prices have remained relatively low despite strong fundamentals. Potential for growth. Despite this suppression, Shechtman sees potential in silver as it hovers near key resistance levels, with prices currently around $31 per ounce. He believes that breaking above these levels could trigger a significant upward move. As gold has historically led precious metal rallies, Shechtman expects silver to follow suit, possibly outperforming gold in percentage gains. In conclusion, Andy Shechtman's message to silver stackers is clear. The market dynamics are shifting rapidly. With industrial demand for silver soaring, mining supply tightening, and geopolitical uncertainties clouding transparency, silver could be on the cusp of major volatility. However, the years of price suppression and manipulation have left many investors doubting whether silver can live up to its potential. The real question now is, will silver finally break out, or is the market manipulation too strong to overcome? Economic impact. This situation poses major questions for the future of the precious metals market, particularly in the context of the global transition to green energy and the rise of electric vehicles. Investors need to keep a close eye on silver's price movements, as well as broader geopolitical and industrial developments, to make informed decisions about their holdings. If this message resonates with you, don't miss out on further updates. Hit the subscribe button and turn on notifications. Stay ahead of the curve in this fast-changing economic landscape.